It is Wednesday, the 12th of April, and we've got one day left in this trading week. Friday is a holiday. We did close below the 50-day moving average. That's the first time it's closed below it since you go well back before the election, or before the election. So we had some weakness, and we are still above the year-to-date volume-weighted average price. I think that's the more important level, and I also think that it's likely that we could hit this volume-weighted average price tomorrow. If you look at how we closed, we're below this key band of prior support, which has been acting as resistance the last 2 days now. We're below that declining 5-day moving average, and when we back it up just a little bit, we're below the volume-weighted average price from the last place we touched that year-to-date volume-weighted average price. We're below the what was important today, which I failed to mention, was the week-to-date volume-weighted average price. So since Monday, and that volume-weighted average price was the 2-day VWAP yesterday, which turned into the 3-day today, and we remain below that. So near term, first level of resistance we need to get above is 235, and as we know, the bigger, more important level up near 236.50. We had 1,986 decliners and 934 advancers, so it seems as though this market is ready for another little push lower. Perhaps breaking today's lows will be the place where that selling picks up a little bit tomorrow. The NASDAQ also below its more important first level of prior support, which has been resistance, and that's along with this declining 5-day moving average. So we're guilty till proven innocent for now. It does nothing to change this overall weekly uptrend that we're in and daily uptrend, but a test of that 50-day moving average I still think is most likely imminent here, perhaps even tomorrow. So I think breaking below this little low in here is probably what gets it going back to the downside. Above 132 is where we become more neutral, and below 132 we are guilty till proven innocent on the intermediate term. So know the time frame I'm talking about, know the time frame that you're interested in. When we're below these declining 5-day moving averages, as it says on our sheet, we simply don't want to be a big buyer on the long side. We can still buy things, but with smaller share size is the way that we need to interpret the message to the market when we are below these 5-day moving averages. Russell 2000, as I said midday, people were excited that we showed some relative strength yesterday, but that all was given back and then some today. So they remain range bound. Nothing interesting happening there, although we are finding resistance at the 50-day moving average, and we've got this 10 and 20-day moving average we're stuck below as well. So we just need to be cautious in there and see how it handles it if it comes down into this band of support, or if we're going to get back up towards that band of resistance. Basically, we're neutral in the Russell 2000 until we break this bigger range. Semiconductors pulled back and closed below their 50-day moving average. This is also the first close below that since December, when we had that one big flush down, and then the subsequent very quick recovery. We've got the year-to-date volume-weighted average price just below us, so we've still got a rising 50-day moving average. And if you were going to be out of the semiconductors, it made sense to be out over here before, as it was breaking down below that declining 5-day moving average, not to wait for the 50-day moving average. So we've got the potential that maybe we undercut this year-to-date volume-weighted average price slightly and then get a bounce. And a lot of times what we actually see happen is that we get that move below the key level, and then we bounce a little bit for a day or two, and then we come down and undercut that by a very small amount and much lighter volume, and that will often trap the shorts in there, and then we get a quick reversal. Now, I'm not calling for that. I'm telling you that that's a possibility, that if you buy this on reversal intraday, don't get too excited, because we have some strong downward momentum right now, and it's not likely to last very long, especially with that declining 5-day moving average. Biotechs continue to try to hold above, and they are holding above the year-to-date volume-weighted average price. So clearly that's an important level, and as we've been pointing out, that's this prior band of resistance which is holding support, but we have a shoulder a double-headed head and a right shoulder. So a breakdown from here would not surprise me if we came down towards 280-ish or so. We simply don't want to be long these things. Again, we've got a declining 5-day moving average, so we know not to be long anyways. It just doesn't make sense. Shares of Apple bounced back a little bit here today, but you know, they've been damaged a little bit, and I wouldn't be surprised to see them test their 50-day moving average as well. So I'd say for now they're guilty till proven innocent on the intermediate term, as long as they're below 143.